Hey, what's going on, guys? So today is going to take a little bit of a different turn here. We're going to talk about a concept that many people don't really understand. And I thought this was more common knowledge. To be quite honest, I didn't really learn about this until a couple of years ago. And as I kind of started asking the question to more and more investors and business owners, come to find out, many people don't really understand this concept. So today we're actually going to be talking about the difference between return on your investment and return of your investment, right? And knowing the difference between these two can make all the difference in our decision making and how we analyze properties, so forth and so on. So this is going to be a quick video, but we're going to just get right down to it. So the first concept about this entire, thought is that numbers will lie, but percentages won't. Okay, so I'm going to ask you right now, if you made $1 million this year, would that be a good year for you? Now, in most situations, the answer is yeah, absolutely. Give me $1 million, right? Now, some people who are out there making multi-millions are like, millions a drop in the bucket. But hey, making $1 million is still $1 million. Yes, it's a good thing. All right, great. Now, if I rephrase that or added on to it and I said, okay, you had to spend exactly $1 million in order to earn $1 million, is that still a good year? Well, if you spent the million and then got exactly 1 million back, if you think about your profit, how much you actually kept, what was the difference? Well, the difference is zero, right? So the numbers can lie there, right? And the numbers one says, hey, I made $1 million. Well, that's a lie. Well, hey, I made $0. Well, that's true, but it's not the full story. So now let me ask you a question. All right, cool. If you spent $1 million and you got back exactly $1 million, what's your return? Now here's the question. If we actually looked at it as a return of your investment, well, guess what? You actually made 100% of your investment back. So now when we think about this, hold on, 100%, if I just made 100%, why do I not have any money? Well, that's the return of your investment. That's the first part of this. The return of the investment says, hey, look, for every dollar that I spend, how much of that specific dollar do I get back? Now in real estate, this is a very common trend. It says, all right, look, I put $20,000 down. All right. I made $2,000 back over the first year. I got a 10% return, right? Many times we call this cash on cash return, whatever the case is, there's different return metrics. So I put down 20 and I got 2 back. That is a correlation to a percentage of return, but nobody ever says, hey, my return was 10, we'll say, hey, my return was 10%, but we won't say it was return of or return on. Well, that's return of that initial capital. So at 10%, it's going to take me 10 years to get my full investment back. At the end of that 10 years, as long as I'm collecting that $2,000 every year, well, at the end of the 10 years, I've gotten my $20,000 back in cash, right? And so therefore that at that point, it's 100% return of my investment. So that's an important metric and we have to understand that. But what's return on investment? Well, now return on investment is saying, all right, after I've made all of my money back, now what am I making above and beyond? All right, so in this situation, let's say I spent $20,000 and then I got a return of $30,000. Okay, well, great. I got my return back. If we look at return of, I've already made my 100% plus an additional 50%, right? So return on the investment after I got it all back would be 50%. Return of the investment would be 150%. See the difference there? So this is a tricky little concept, and it's not really tricky, but it's just really about understanding the difference between on and of, because, and this is why it's important, oftentimes we'll get little carrots dangled in front of us as investors and as business owners and saying, hey, I can bring you 200% return on your investment. Okay, that's cool. That's cool. But what do you actually mean? Are you telling me if I spend $10,000, you're going to make me, the 10,000 back? That's the 100% plus another 100%. So it's 20,000. So in reality, I only profited $10,000. Is that what you're telling me? Right? Or are you saying 200% on, meaning after I got my 10,000 back, I've made an additional $20,000, right? So bringing in a total of $30,000. That's an important factor to truly understand. Now, not many people understand this concept, right? And some may specifically try to avoid using the words of or on. But here's the thing, guys. When we go out there and people are presenting to us, if we don't know the questions to ask, well, then how can we expect to receive how can we control our expectations when we're receiving the results, right? We're like, hey, hold on, man, you said 200% return. My money ain't adding up. Or if we're thinking 200% return and we're only thinking of, well, then we're missing out on a whole nother concept here when we're thinking about on, right? So it's a really great question to kind of ask yourself, not only for opportunities that present itself on the business side, but then let's look at these deals. When you're really in a cash crunch, Because let's think about this, guys. As a CEO, you're the business owner, you're the CEO. What's our number one job? What are we trying to manage and control? We're really trying to manage and control the investments that we're making into the company. The investments that we make into the company not only go into the people that we hire, not only into the systems and the operations, but where are we spending the money? You know, the marketing, the types of assets that we're buying, the types of risks that we're taking on new products and services. So when we start to ask that question, all right, cool. When somebody comes to us and says, hey, our return is 100, 200, 50, 35%, we need to ask, is it of or on? All right. One last little piece on this here, guys. If it's return of, the biggest distinction, return on means we've already made all of our money back. If it's return of, that means we have not made all of our money back yet. Okay. So if they say, hey, in 12 months, I can give you a return on your investment of, that means in that first year, I've gotten all of my original money back plus some. That's a hell of a lot better deal than somebody saying, I can give you return of your money on blank. Right? And say it's 30% of your money. So if you spent $10,000 in that first year, you're going to earn $3,000, meaning that your return is going to be the same for a couple of years. Maybe it might go up, but it's going to take a couple of years for you to get your initial investment back. So if you don't walk away with anything else, just understand that. Return of, all right, is going to be of your initial investment. Return on means you got all your money back. So if you enjoy this type of concept, really understanding the grander picture when we're looking at even the intricacies of how we phrase certain things, go ahead and check out the video Brick by Brick Wealth, where we talk about the secrets of managing a real estate portfolio and really understanding some of those smaller things as well. So we'll put that video link somewhere around here. But guys, there's a ton of other content on the channel as well. So be sure to check that out and leave a comment below if you guys learned something new about return of versus return on. And if it was something new, go ahead and hit the like. Thanks again for watching, and we'll see you guys in the next video.